Hi, this is Paul from globaltradingsoftware.com, and this is a gold breakout trading tutorial. I'm using gold futures on the Ninja Trader platform, using some software to help me here because it's very important when we're looking for those range breakouts to be able to define the range, as also give it the bias for the range as well. So which direction are we going to trade out of that trade, that range? So we're using the expert range breakout, and the links for the software will be below here. It's not just available for Ninja Trader, lots of other platforms as well. So the next thing we're going to be using is the Guardian zone. So these multiple time frame support and resistance zones that we're using, these are sort of cyan and green as support and resistance zones, as you can see there, because they're helpful not just to help with the entry but also to manage the trade. We're then going to be using the manager, and we're going to talk about different settings on that and how to manage the trades. So I'm going to go to yesterday first, then come to today. So yesterday we had the London open range. The bias for the opening range was red, so we're only looking for the short, and the short would have been a break below this support. The support held and it went the opposite direction. We do not trade it. We then come back down to test the multiple time frame support zone from the Guardian zones and also the range, and it comes back up and goes level into the New York gold pit open. When you get the New York gold pit open here, this is the bottom of the range where the cursor is here. So it's defined as in red, so we're only looking for the short, but we're not going to go too aggressive out of here. We're going to wait until it breaks the bottom of the London opening range and also the support zone here. So the sensible entry is at this point where the green dotted line is at 27.9. So we always get some volatility there, and we need to understand the behavior of that volatility, see where our stop losses are going to be and when to adjust and that sort of thing. So the first thing is the initial stop goes 1 or 2 ticks above that opening range high. We then get this big move down into this support zone, and that is 40-50 tick move. That's a good trade for some people, and they would use that as a target and get out. The manager allows you to maximize profits consistently without panicking too much. I'm going to put a link down below as well to the manager the tutorial on how to use it, because it talks about volume behavior, both within each candle and also average volume, higher or lower, and it talks about the ribbon. But the basics here is that we did come down, we tested it, but the move back up had lower volume each candle because they were grey. They were up candles, but they were grey. We then found resistance in what was previous support, normal behavior. We came back down to test that support again. We came back up and we tested the real lower bound of that support zone there, and then came back down again. All this time our ribbon was remaining red. We actually did eventually break through, and we did around about 100 tick move. Going into the close, for those traders that don't like to carry it open, that was a 90 tick move. Very, very sensible trade, using the range breakout to define the range, define the direction we're going to break out of that range, then using that the Guardian zones to make sure that we're not shorting into support and we've got enough fresh air to the next support zone. We did that. We understand the behavior of the manager, and now we've got decisions to make. Do we close or do we carry it through? Me personally, I like to carry things through. I've been doing this a long time. Most people take that $900 per one contract and get out, and there's nothing wrong with that whatsoever. For me, if I just pull the indicators up here, I'm going to go to the manager. I'm going to put it on day trading conservative. So what this does, and again with the support and resistance zone there, just going to take some of these higher ones off. We can see we initially start here, the ribbon remains red during the Asian session. Good. One thing I would do is I'm going to bed. I'm going to put my trailing stop just above this support and resistance zone here. I'm leaving lots of fresh air. We're going into the close. I'm locking in 45 ticks. Okay, it's pretty good trade. If it comes back against me overnight while I'm in bed, it takes the profit. If it doesn't, I wake up in the morning. We can now see that we did have a test during that Asian session of this particular zone, and then when it pushed through the next zone and I'm awake, I then put my trailing stop above this position here. This starts to get to maximize those profits. So before you go to bed, before you leave your computer running, you've put 45 ticks of profit with that trailing stop. Okay, you're safe, you're risk free, and if it comes back against you, you're going to take your profit. But what you do is giving the trade a chance to work, understanding the behavior, understanding where those support and resistance zones are, and the manager is keeping you in the trade with the red. So keep on going. Now we're coming into the next day, and we've got the London Open. So this is at 3 a.m. EST. Again, if you're in the US, you're still asleep. You've still got that trailing stop all the way up there. For me, I live in Dubai, so this is about 11 a.m. my time. So we get the London Open. It's defined in red, okay, and then starts to push down. So when this is defined in red, for those European traders or Middle East where I live, we've got an opportunity to go short at this point, okay? Or in my case, I want to add to the position. So if I was 2 contracts going down at this point here, I was $900 locked in profit at this point. I'm around about $1,000, $1,200 locked in at this point. All of a sudden we break through this support. We come back up to test it as resistance. We get the London Open. The range is defined in red. We look for the short breakout. I add 2 more contracts. Okay. Now we go aggressive with a stop above this support and resistance zone. Okay. Now we've doubled down. We're on probably 120 ticks, so $2,500 for this trade. We're doing much more. We've added more contracts, and this is the way that professional traders trade. You don't want to be getting out too early. It takes time, it takes practice, and it takes the understanding of behavior. The guardian zones for NinjaTrader, the manager, and then that sort of range breakout, that particular type of strategy combined together helps you understand. Now you can see gold's pushing even further. We're getting in towards the New York Open. So the thing to do now is we've had this one pivot. So now we are going to adjust, our trailing stop, if I can get it to move, above that pivot there. Okay. So now we've locked in, I don't know, a lot of ticks. Okay, 150 ticks. We've added more contracts to this position right now. For me, I'm looking for more support and resistance, and I've got to zoom out to see where that is, and there isn't a great deal. I've got to probably put the previous zones on there to help me here. And there isn't any, so we're as low as we can go, so there's fresh air. Okay, so this means I can't use support and resistance now. We're pretty much going really low. So the next thing I do, I want to just put in maybe a 30 and a 60 and even a daily zone there to see if there's any of those down below. And there's a daily zone all the way down at this point here in this lighter grey. That's my next support. This is a Wednesday, so I've got plenty of room left for the rest of the week, as far as I'm concerned. When I'm trading on the 10-minute, I'm only usually interested in the 10 and the 15 for the breakouts. So the next thing for me really is decision whether we go conservative or aggressive right now. So there's options that I can make. I can use pivots, and once we break below, we go pivot to pivot. Once it breaks below like it has here, I can go really aggressive here. Or I can go back to the manager. I'm on day trading conservative right now. So if I go to the indicator and say, right, I need to be a little bit more aggressive on this. So let's go to moderate. Okay, it's going to change that. Now what I'm going to do is just keep an eye on this red. Okay, I've got a feeling we've come down through this 30-minute zone here. If there's a pullback our trading stop at this point should be pretty safe. We should test this previous support and resistance zone if it comes up. The main thing we've got at the moment is we've got the New York gold pit open coming up
order submitted
really soon. Sorry, that's another order gone in. That could push it down even further. If it does, we can be more aggressive and go to that next pivot there. You've got to have options, okay? And the option right now, waiting for the gold pit open, is I'm just going to give it a little bit of room. Right now, this trade's probably $3,000. We're on 4 contracts. It's running really well. We've got lots of profit locked in. We're all good. Let's give it a bit more room. Let's see if this thing can push down even further to test $1,900. This would be a fantastic trade. You don't need many trades in the week. You only need 1 to 2 of these, a week, if not a month. Once they run and we get momentum and we've got the support resistance, the Guardian Zone's helping us here, sensible with the management, we can make some really great strides into that profit for our trading business. It's very important that we have those combinations. We have the signals, but also we need to manage those trades. It's very important, and we do need to make sure we frame our charts with those support and resistance zones from multiple time frames, because they're the ones that gauge how we manage and how we enter trade. So hopefully that helps. Check out the links below and hopefully see you in our community. And those that are in our community, well done. You are knocking it out of the park with some of these trades just lately.